Hey, good morning. Let's go over today's trade plan. So heading into the open, at this point, the buyers are in firm control, and on the upside, 77.5 to 79.5 is the short-term resistance area where we saw a strong sell response yesterday. And at this point, if the market continues to balance above 71.5 to 73.5, it would have the potential to break out above 77.5 to 79.5 and test the 82 quarter to 83 quarter resistance, and finally the 86.75 to 88.75 resistance zone, which actually marks the all-time high. So beyond that, there is no hard resistance in the market, and the primary resistance zone on the day time frame is that 86.75 to 88.75, and first test of that area can attract responsive sellers. It's the all-time high. If nothing, we could see some profit taking there, but shorting that zone is still a risk point because if there's a lot of momentum behind it and there is broad market strength, then we could see a new all-time high. It doesn't have to be necessarily a sustained new high, but we can certainly at least break to a new high if there is enough strength and momentum behind this move. On the downside, a break below 71.5 to 73.5 would just tell you that in the short term there's a little bit of weakness and lack of strength. That would bring 65.5 to 68 into play. Buyers can still be active at the zones below. So the 65.5 to 68 is essentially the previous balance area high, the breakout area, and buyers can still be active there. Below that, we have support at 61 quarter to 63 quarter. That's a pretty solid area where if the buyers can hold even above 61 quarter to 63 quarter, they can still technically maintain control. We can just continue to balance and then eventually still try to break out to a new all-time high. In that case, it may not happen on the day time frame today, but bigger picture, that scenario would still remain valid. And if we break 61 quarter, 63 quarter, then we need to be pretty careful on the long side because that could actually shift the short-term control to the sellers and bring 57 to 58 half, 53 to 54 half, yesterday's low into play, and potentially lower. At that point, we could just balance in a much wider range, and we may have to go down towards yesterday's lows, maybe even 48 to 50, in order to get a better buy response. But right now that's not the scenario that's in focus or in play. Right now the buy side is in firm control, and as long as the buyers hold it above 71.5 to 73.5, they can maintain that firm control, and we could be setting up for a break above 79.5 for a test of the upper resistance areas. Again, first time up, we can certainly get some profit taking, some quick rejection, and then kind of balance a bit. But eventually, if there is enough strength and momentum behind it, then we don't have to stop at 86.75 to 88.75. Usually shorting around the all-time highs. First time, there can be some edge, but if there's a lot of momentum and broad market strength, then we can quite easily at least make a marginal high. And then behind it, there is no hard resistance. So at that point, it's really going to be about where the range gets exhausted, and if we do make a new high, then we'll have to look at the internals to see is there enough strength to really sustain that new high. I think the safe bet is if you're seeing a lot of strength, focus on the long side, but then as we get up to the resistance zone, 86.75, the open gap at 86, take profit and then let the market kind of play out because there can be some struggle around that area, and at the same time we can just as easily just poke through it and then the sellers step in. So it's a bit of a risk point up at 86.75 to 88.75, and the short term 71 half, 73 half is really going to be important. And if we're holding above it, then we do want to be careful on shorting this market as well, unless there are some very clear-cut signs that it's unlikely to hold at the highs, or it's unlikely to hold or break 79 half. If there's a lot of divergence on the internals, or the momentum is simply not there, or it's downsided, then of course we can still consider it because the market can still balance in a range before we get a proper upside breakout towards the initial resistance zone or beyond. But that's a riskier trade, and that requires more of a real-time read. So if you want to keep it simple, be careful on the short side above 71.5 to 73.5, and in the event that we do get a pullback below 71.5 to 73.5, still focus on longs at initial support, especially at 61 quarter, 63 quarter. That's a spot that can provide some pretty decent edge, and from there the market can still balance and go back up. But for now, the buy side is clearly in control, so unless that changes, that'll be the focus. So those are the main ideas heading into the open. Let's see if the buyers can maintain control above pre-market support. Let's see how we react to the pre-market resistance zone, and we'll take it from there.